Hey guys, welcome to today's edition of the London Session Open. Today is July 9th, 2018, and my name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com and Amana Capital. Starting a little bit later today, sorry about that. It's 9:28 a.m. in London right now. The best way to sort of know when I'm going to go live or not is just to keep track of my Twitter feed. I will always send a message out before going live. You can follow me at AlexFX00. So Twitter /AlexFX00. Here as well, you find a few retweets from my colleagues like Nathan Batchelor and as well all of my analysis. Okay, let's get going. And good morning. Hi, thank you so much for joining us this morning. Hi, based in the Netherlands. And we have Mauricio as well. Mauricio, where are you based? Please let me know. It's always good to see so many people here. If you are watching, guys, and you want to interact, you just need to have a YouTube account. As well, don't forget to hit that like button. In fact, smash that like button. There's a little like here. Please do that. That's your way of supporting the webinar. And we have Essam here as well. Good morning to you, sir. Thanks so much for joining us this morning. Where are you based? Okay, so we have Mauricio in Italy, and we have the Netherlands. Essam, where are you from? Where are you based? Please let us know. Okay, so let's get going, and we're going to take a look at the markets as we usually do. But before we start, I need to stress that financial markets trading, unfortunately, is risky, and there's a general risk that we'll lose all of our invested money. So please bear that in mind. Okay, so we're actually going to begin with the dollar index today. So the dollar index, last Friday, we had two interesting things. We had the non-farm payrolls, which were good, but not so strong that they're going to force the Fed to raise interest rates potentially 2 additional times this year. Heading into the event, we had about a 50% probability of having an additional 50 basis points. That's 2 rate hikes by the end of this year. And they already increased interest rates 2 times already. So numbers were good. People are getting employed in the US. People are making 2.7 times, 2.7% more than they were making last year. So that boosted stock markets. At the same time as well, financial Twitter and as well sort of Bloomberg, CNBC. A lot of people have been very sort of bearish on the back of trade wars. And yeah, it could potentially turn really nasty. But right now, the measures that put in place, US, China, Europe, Canada, and so on, are not going to sort of derail, at least not the US economy. So we saw stock markets rallying. So we have a risk-on situation as well. And this, in the case of the dollar index, caused the market to trade below last week's low. Last week's low was 94.17, and we traded below that level on Friday. Now you're seeing further continuation here in the dollar index on the daily, and it looks to me that it's heading towards its June low. And then, guys, we need to see, because in the big picture, the dollar is still in a bullish trend. Obviously, in the short term, you move to the downside, so maybe the euro dollar is going to move up to its ECB rate hike. The pound dollar as well, we are seeing trade higher, and you have as well the Aussie dollar moving up a bit. But is it the beginning of a major trend where you're going to see the dollar weakening? Could be, but probably not. So I suspect the market will continue to trade sideways between the June low and the high here, which is 95.57. And then we'll see. If it takes out the June low, we'll have probably a steeper correction. Not sure, maybe all the way down to 91. I mean, that would not be surprising, but most likely less than that. If you put a Fibonacci from the low to the very high, you can see that this would be the first fib of this new move, and then maybe 50%, maybe 6.8% correction at 91.74, but then most likely bullish. Why? Because in the long run, it's more likely that the Fed is going to raise interest rates more often and more frequent and more aggressively than they would do in the euro. So in the short term, most likely the next few days, I'm bearish the dollar. I don't think we're going to see massive weakness, but weakness for a few more days. For now, remain bearish. And obviously, if we take out the June low, we'll continue to have that bearish bias. Now, what does this mean for pairs like the euro? Well, this means that the euro most likely will continue to trade higher. Let me just check something here. Yes. Most likely continue to trade higher and fortunately potentially take out this high up here. So right now I would not be selling the euro. You can sell it here. There's nothing wrong with selling it here technically. Again, if we trade above the June low in the dollar index, then that means that the pair is going to trade below this June high in the euro. Okay, so most likely more sideways price action here. This will probably move down, probably move back to the original entry for a bearish position, or at least the June 25th high. So it's definitely fine to sell here, but I would take it easy with short positions. Now today we're gonna deviate a bit. We're gonna take a look at the pound as well. So on the back of what's going on in the UK over the weekend, so Theresa May and her top MPs that she works with agreed on a unified stance and unified vision on how they want to proceed with Brexit. And that's obviously good. We have clarity from the UK side, and as well we have now Brexiteers. There are more pro-Brexiteers leaving Parliament and resigning, and that again is sort of lowers the risk of having an aggressive Brexit, right? And this increases the fact that it's more of a soft Brexit more than a hard Brexit is pro-business, and because it's pro-business, the pound is heading to the upside. Okay, so that is what's happening here. And I was actually bearish heading into over the last few days here, but again, sort of looking across everything, it made sense to sort of reduce long exposure in the dollar. To give you an idea, I was short copper and I was short platinum, and I closed them out, those positions, yesterday at 2 a.m. London time. So I have no exposure against the dollar right now. So back at it. So here we took out the high and moving to the upside because what's happening in the UK is pro-business. And this could potentially lift the pound a little bit higher. Maybe we'll head up to the highs, to the June high. I think if we move back down to something like 32.65 or something like that, which was the levels I was watching this morning, I think if we adjusted, it's now the 61.8% correction. I think in general, if you just keep an eye on this high all the way here and just remain bullish above this low, which is the July 6th low, then I think probably down and then probably up. And then guys, we need to see. Unfortunately, I don't know right now if this is a major low in the market and we're gonna head back up to 41.40. I doubt that. Probably up a bit for a few more days and then we'll see. Now let's go back to sort of the original markets we look at, and here's the price of Bitcoin. And Bitcoin is holding up very well, much better than a lot of its peers. And we're looking at our potential head and shoulders here, with this being the head, left shoulder, potentially right shoulder. And I know we spiked above the high here on the 8th, which is Sunday, but there's not too much momentum. If you want to trade it, you know, you just, I traded Bitcoin Cash last week. That did not work out too good. I closed out before I hit my stop loss though. But I guess if we take out 68.28, you know, probably up, down, and then up. But right now, the motivation for traders to buy cryptos in general is not really that strong. So you just need to see what happens. Maybe up, down, up. Here's the price of gold. So you might remember gold, you know, I was short-term bearish above this high, and I had been bearish for quite some long time. Now the market is trading above this level here, which is the June 4th high, and gold looks to me that it wants to trade all the way up to the June 24th high, which is up here. I think this could probably go up, down, potentially up. If you're a scalper, this is interesting. this could again be the beginning of something bigger, but it's too early to make a call on that. You know, it could be just down and up, and you know, you can potentially get away with it. But I found myself that it's very hard to pinpoint the exact low and then, you know, being able to ride that all the way up to the upside. I don't think that's going to happen here. So probably up again to the June 25th, 24th high, 25th high, and then probably down, sideways for a few days, a bit boring, and then potentially we'll see what happens. Take out the low, and clearly we'll probably head to the downside like this, okay? And if you look at this, you have a high, 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 then you have a high here. So still quite an aggressive sort of downtrend in the big picture. So what am I looking for? I'm looking for us to go up, down, trade a little bit of sideways, spend a week or two, maybe even a month. The longer it spends down here, the better does it become. As an example, here in gold, and we did actually talk about this setup. You might remember, the market was trading sideways here for a long time, and we did try to trade this little push to the upsides, and that worked out okay. And then I said if we took out the low, we're probably going to head lower, and it happened. It happened by the end of March and beginning of May, and then now at the beginning of July, we reached that target. Now this is crude oil. Crude oil as well is trading sideways, and I think it's better just to look at it from a daily time frame more than anything else. In the big picture, we are dealing with an uptrend. The price is creating higher and higher lows, so there's nothing wrong with being bullish, but probably not the best opportunity to buy up here. Now there's actually is very good at is consolidating like this, because if we take out the 75.27 level, then people gonna probably be buying up here, and they're probably gonna be putting stop losses just below the low here. They don't have to do it, and you don't have to do it just because I'm telling you that that's what I think is gonna happen. But I think if we trade above here, it might go up, it might go down, and then eventually up. This target is the range, the difference between the low and the high. That's the target. But I showed you a big head and shoulders pattern as well, and it does suggest higher prices. The alternative is that if we take out 72.08, then the market could potentially go down like that, okay? Here's the German DAX. German DAX is moving a bit to the upside. And if you look at it from a bigger picture perspective, I would not really trade or focus too much on it, to be honest. It's a bit tricky to navigate, but yeah, probably head a little bit higher. I don't even really want to look at the short term, but I guess as long as trade above 12,092, you know, might go down a bit and then potentially up again. There are better markets. We did talk about it last time, and it's going really well right now. It's the Aussie stock market. The market took out this high. We did talk about it in this presentation, how a break here could lift the market. Right now it's looking good. In fact, I already bought down here, and I decided not to buy more just because of the non-farm payrolls. But if it goes down a bit, I might buy a bit more and then sort of target 6,400. Okay, let me see here. High is looking to buy the S&P on a pullback. Yeah, the S&P is interesting. The S&P is definitely interesting. I'm looking to potentially get involved myself, but I don't really want to buy that that pullback. I want to buy the breakout. So if we take out this, which is the June high, I think if we take out that level, I think I'm going to get involved. Now, the way I look at this, I look at the Aussie stock market and the S&P 500 like one big trade. So I will look at my gains in the Aussie stock market and I say, okay, I have this chunk that I can have in floating gains. And then I'm going to open a position. So sort of if I get stopped out on both, I will break even on both. But yeah, take out the June high and I think it's going to be fine. Got a question here as well from Esam. Can I please make my screen clearer? So my screen is actually streaming in HD. It's streaming in HD, and I think the issue here would be probably on your side. You probably would need to check your internet or just check the settings, but I'm streaming in HD right now. Okay, I don't have any more questions, so we're gonna wrap things up. I'll be on time tomorrow, so join me at 9 a.m. this morning, 9 a.m. o'clock here in Trade Captain. The best thing is just load the page, let it run, click on play, and then you go and grab yourself a coffee, and then put the audio on, of course, and you'll hear when I'm live. As well, tomorrow I'm hosting a webinar, so on technical education and webinars, you can join me. I'm gonna make some changes to the timing of it, but I'm gonna start a little bit earlier so it doesn't conflict with the, actually I'm not sure if there's any football tomorrow, but still gonna do it a little bit earlier. As well, if you just joined, remember that when you join, it's gonna show you where I am right now, but if you wanna look at things from the beginning, which I suggest you do, just pull it back. As long as you ask your question and I can see it before I finish, then I will be able to reply back to it. As well, if you click on watch on YouTube, you can hit the like button, please, here, and also you can subscribe. As well, if you wanna, get notifications on every video, then you can click on this button here. Alright guys, thanks so much for watching. Join my webinar tomorrow if you want to. We're gonna talk about trading patterns and how that helps me in my trading. Have a good day, and thanks so much for watching. Thanks.